Good evening. Ira Epstein, and here we are with your financial market wrap-up, and this wrap-up is for Tuesday, the 3rd of September, 2024, 6:30 p.m. Central Time. And wow, you know, September was anticipated and is anticipated by many analysts to be a weak month because if you go back in history, actually to World War II, it loses typically ground, the stock markets, in the month of September. Why? Is a whole number of reasons that I can't even explain. I follow charts, and when I look at the chart action, I see what's going on. Today, one of the biggest refinancing days of the year for corporate debt. Can you believe that? Now, I thought maybe it's just a fluke. It isn't. Go back last year. Last day after Labor Day, the biggest of last year. So corporations, for some reason, like to float their corporate debt, and I think 20 some odd of them did it today. Big numbers that were done. And maybe what they're saying is, hey, going into the last quarter of the year, they like to wrap things up. I don't know what else to say to you, then that's it. Or maybe they want to finish this quarter up with it, the third quarter, and wrap up their debt. I don't know. But it's something in that accord. The metal markets did not act as safe havens. People were running into the notes and the bonds, dumping energy markets. Crude, you're down to $70 a barrel. Biden administration, energy czar, where are you? Why aren't you buying more crude for the strategic reserve? You're holding in the nat gas in the 220 level. In the grain market, soy oil got smashed today as canola prices in Canada went limit down because in retaliation for the tariffs that Canada has put on electric vehicles out of China, China's decided that suddenly the canola they're importing, no, this is not right. It's all wrong. It's being supported by the Canadian government. It's flooding the market. Let's shut it down. Bingo. So that was the spread news that you had first thing today. In the grains, you're trying to get seasonal harvest lows in place. Now, whether they're now, a little later in the month, this is what the market is trying to set up, and this is totally normal as now we're going to get the grain coming in from the field. Now, it doesn't start in beans yet, generally. It's in the corn, and it moves throughout now and through September and October. All right. In the dollar, a bid, but not a runaway. People didn't run en masse to the dollar today. They sold off a number of currencies, and the dollar was up slightly. Tonight, it's sort of a wobble. So let's take a look and see what we've got. The first thing, we had been up here, and I said, if you pull back, and I had no idea if you'll pull back or not, but I did write in last week's letter, and I pointed out with charts to my paid subscribers, the odds were the market was going to break. Now, how much is the question? To get all the way down here, who knows? When you go back and you look at historical breaks, you know, 2% is often what I've seen in September in some of these indices. Each one's a little different, obviously, but this is one of the numbers. Can we get down to 54, 71, 60? You might be able to. Okay, that would do an interesting job. As you can see the chart here, you broke apart. Now the question is, do we have a pattern that we can look at? Some people might say a funny form of a head and shoulder. I don't know if it qualifies. I do see that as a shoulder in that it's possible, and the market comes back the other way, and if it eventually gets through all this, well, then I'd pick it up, and that's how I get up towards that 6,000 level plus. But that's not what I'm seeing. I'm seeing the market just broke down right now. The pattern is super ugly. You have a higher high and lower low. That is not a trend. The market's fighting a battle, present tense, at the 18-day moving average. If it closes by a lot under it, it probably wants to get then to the 54, 31, 60 level, which is the 100-day average of closes. Bollinger Bands are not what stopped this rally. It fell on its own part. I wish I could say there was a resistance point. Other than just getting up into that zone, there really wasn't. And as I look at momentum, you lost your bullish embedded momentum, and you are now in what territory? You still have one of the numbers over 70. I teach in my enhanced Bollinger Band course that any number over 70 without both numbers being over 80 for a certain period of time is an overbought condition. To work off overbought conditions, you generally go sideways to lower. And that could be what the market does. So keep your eye on this whole thing. If the market lets go to the downside off a shock in the jobs data this week, keep your eye on that as your support number. When you come to the NASDAQ, you went right on through the 100-day average. The 18 gave ground. You're in a full-fledged downtrend with lower highs, lower lows, and instantly oversold, not even trying to lock in momentum, saying, we're going a lot lower. So if the market breaks just like the S&P, one of the areas of support should be the 200-day average at 18,485 to 18,619, which is the lower Bollinger Band. We then get to the Dow, which is the strongest of the indices. It's still over the 18-day average, but it too has lost its momentum. The red line's well under the 79 level. I think prices are going back to the 18-day average before they make a new high now. And in the Russell, you're already under that 18-day average. Never did embed. You're in overbought territory. And again, you've opened up the door for possibly challenging all this area. There's nothing I see that drives the markets to the upside at this point in time. We then get to the 10-year note, and you can see you came down this morning, and all of a sudden you had a big reversal to the upside. When we come into the 5-year note, the same type of thing taking place there. Very interesting as to what they did. When we come to the SEP dollar index, you can see higher lows, higher high, very interesting. And then we get to the eurocurrency, down under the 18-day average, still has the pattern of higher lows, higher highs, but for the first time, you don't have upside bias. You started losing that last week, and you're continuing with it 3 days in a row. So now the 18-day average becomes a pivot number. If the market decides to break big, which I don't see, but if it does, from 109.30.5 to 108.84, the 100-day average, the Bollinger Band, and the 200-day average are the support mechanisms. Momentum down. British pound lost its bullish momentum. So before prices go over the recent high, my work says the odds are strong that you go back to challenge the 18-day average of closes. In Bitcoin, still coming down, oversold instantly, and support should come in at the 56,750 level, the lower Bollinger Band number. No buy signals in sight. Crude just fell apart. Think of this. If China sneezes, what are the two markets it imports a lot of? Crude oil and copper. Big numbers. Iron ore, too. Higher high, lower low, boom. You've gone right on down. Never did have the strength to get up to the Bollinger Band the way that you did in July and August. And this market's now sitting with no trend. I want to make that clear. You have a higher high, lower low. I call it just a wandering market. But that's not the case in WTI. Lower highs, lower lows, and you're under the Bollinger Band. So how often do you stay under a Bollinger Band when you're coming out of a broad sideways action? 5% of the time. When you're narrower like this, it's not uncommon to hit the band and get under it as you push away from narrow bands. This can just whipsaw you. I'd be very careful. I have to say the same thing is probably true to a degree in heating oil. Look how it's coming apart. I guess we're going to have a good winter, right? If you can get prices down enough, we're all going to be looking at that number. And in natural gas coming back up. If you're looking at the numbers, the U.S. is said to be ready to double its natural gas exports over the next 4 years. That's pretty exciting business for America. We'll see if the market does that. Expect to see the resistance at the 18-day average of closes is what I'd be looking at right now. So I'd put that all together and say, okay, interesting times in the market. What do you do? Well, I think the first thing you do is understand the reports you're going to have in the morning, the Mortgage Bankers Association, trade balance data, the Red Book Group. This is what everybody's going to focus on at 9 o'clock, the JOLTS number, factory orders data at 9, and the petroleum numbers. Pay attention to it. And one last thing, remember, I think that you'll get a lot of worth. Maybe I can throw a trade idea that makes sense to you for you You have your own idea possibly, and you're going, that's the push I needed. Or I show you my disciplines, and maybe that helps you from entering things when you go, darn it, why am I doing that wrong? It's another point of view. We're talking either $99, $49, $29, or $32. All you need to do is click the icon up here. There's an email that I send out if you're on our mailing list already, and you can get in that way. You can always call my staff. They'll help you at 866-973-2077. I promise you, this ends on the 8th. I've never done a 3-month special, and we are getting nice response to it. I'm Ira. You have yourself a great day, and I will talk to you all tomorrow morning on Wednesday, about 8:15, 8:30 in the morning. Take care.